This is going to be an absolutely insane week of earnings in the stock market, and definitely billions, if not trillions of dollars of market cap are going to move this week. We got companies like SoFi, which already reported earnings by the time I'm posting this video. We got Apple, we got Amazon, we got PayPal, we got Shopify, and tons of other ones that we're probably not gonna be able to hit, but we're gonna hit some of the biggest ones that are reporting earnings this week for Q2 of 2023. We're gonna get into all that in this video. I'm super excited for this one. But first, if you're new here, I'm Austin. I'm a co-owner of cloudmusictweet.com. I'm a stock market investor, and most importantly for this video, I'm a shareholder of multiple companies that are reporting earnings this week. So me personally, my accounts are going to move massive this week. Real quick, the channel's somewhere close to 1,200 subscribers. I'm not sure where we'll be by the time I post this video, but if you're one of those people and you're back, thank you so much for being subscribed. If you're not subscribed already, click that button and drop a like for me as a thank you for doing that. Here's a picture of both my cats, Millie and Luna. Millie's the gray one, Luna's the brown one. They're so sweet, and they thank you for subscribing. All right, let's get into this. So we already had SoFi report earnings today. This was Monday. I'm posting this at 7 a.m. They reported. It was a pretty good earnings report. I actually just released a video on it. Go ahead and check that out. It goes into all the details of what I was looking for in the SoFi earnings, what I was excited about, what I wasn't so excited about. Just to give you a short version, they had 37% revenue growth. They had record EBITDA. They had massive product growth somewhere in the mid 40s. And the technology platform got back to growth. It wasn't crazy growth on the technology platform, but it was pretty good growth. And the financial services total products exploded massive on a year-over-year basis. Tuesday before the bell, we've got some interesting companies reporting. Norwegian Cruise Lines is reporting they're expected to grow revenues by 82%. That's insane. I'll be listening in to see how the consumer's looking and how the travel industry is as a whole. I'm not interested in opening a position with Norwegian Cruise Lines at all, but I will be checking out the conference call just to see any commentary around the consumer. Uber is also reporting, very popular retail stock. I'm not interested in Uber. The bad balance sheet situation with $4 billion in cash, with over $10 billion in long-term debt. That doesn't include short-term liabilities. I'm not interested in touching it. The growth is not high enough, and the earnings situation is not good enough for me to be happy with a bad balance sheet. Caterpillar is a stock I've considered opening a position with, but it trades so rich that I've never stepped in. They're still clocking like 16 to 20% growth on a quarterly basis. When you look at year-over-year numbers, which is insane, and the dividend is nice, and the dividend growth is very respectable. I've considered opening a position with them many times, but I've never pulled the trigger on it. And then the last one I want to check out on Tuesday morning before the bell is actually Toyota. I want to see production numbers, delivery numbers, etc. And of course, any conversation around electric vehicles, electrification of the Toyota brand. Because I'm a shareholder of Tesla, I want to hear anything around the auto industry as a whole, just to see if I can get any insights as it relates to Tesla. Tuesday after the bell, we've got AMD reporting. AMD and NVIDIA are the big chip makers that are in the AI conversations right now. An insane thing about AMD right now with this crazy AI hype is that they're actually expected to have revenues decrease on a year-over-year basis, which does not bode well for AI stocks in general. A chip maker that's looking to capitalize on the AI super cycle we're going into should definitely see revenues increasing substantially right now. NVIDIA came out and guided that their revenue was going to go from a prior projected 7% up to a 70%, which was absolutely insane, and that's what started the crazy run-up in NVIDIA's share price. If AMD comes out and they report this negative 30% revenue growth, I could see big downside in the share price, but AMD's management team is so good, just like Apple's management team, of spinning around bad earnings with great commentary. So a company can give great commentary and great guidance moving forward that can actually move the stock up in the short term, even if earnings are in a weak spot, which is kind of crazy. I'll also be looking at StarBUX earnings to check out where the consumer's at, any commentary around the consumer. I want to get an idea and a picture of where the consumer's at, and I'll be checking out StarBUX earnings for that. Not interested in opening a position. Pinterest is one that's always interested me, because I feel like if they can figure out how to monetize that platform appropriately, it could be one of the biggest cash cows that we've seen in the social media space ever. I just don't think the management team has hired the greatest minds in advertising to help move that business forward in a massive way that gets me excited to own shares. So I'll be checking it out. I'll potentially put it on my watch list. We'll see how these Q2 earnings go. Two others I'll be looking at, MicroStrategy. I think it's a hilarious drama show with Michael Saylor and all the crazy Bitcoin situation going on there. I will not be touching MicroStrategy with a 10-foot pole, no chance. Basically just a Bitcoin ETF disguised as a stock, not interested. I'll also be looking at Elf Beauty. Jeremy Lefebvre, the owner of the financial education channel here on YouTube, has a massive position with Elf Beauty, and I believe it's one of his best performing stocks ever. They're expected to put revenue growth of 50% on a year-over-year basis. That's insane for a cosmetics company. I don't own ELF shares, but I do own the Honest Company. So I'm going to be checking out similarities and differences between the two as it relates to how they run their business model on the cosmetic side. Wednesday before the open, we've got CVS reporting. I've considered opening a position with either CVS or Walgreens. I used to have a position with Walgreens. I sold all my shares. I completely closed my position when they had that CEO shakeup about a year and a half back. But both those stocks are heavily beaten down, and I would be interested in checking them out as a potential value play, turnaround play, and dividend play. When you can buy these dividend beasts and dividend growth beasts at low valuations and low prices, then your yield on cost as the price moves up, assuming you've picked a good value play and a good turnaround play, is going to be insane. You might buy the stock when it has a 4 or 5% dividend, and then quarter after quarter or year after year, they're able to raise that dividend a little bit because they're becoming more profitable. They're expanding their business, they're becoming more of a beast, and then your yield on cost can increase to 5.5%, 6%, 6.5%, 7%, etc. And that dividend money grows and grows over time, and you can take that dividend money, flow it back into more value stocks, flow it back into more growth stocks, flow it back into index funds, whatever your specific strategy is, you can flow it back into those stocks that are undervalued in that moment without putting any extra money into your account because of that dividend money rolling in on a regular basis. So that's a beautiful thing. I'll be checking out CVS and I'll be comparing it to Walgreens Boots Alliance. All right, the first time it starts to get crazy this week is Wednesday after the close. We've got PayPal reporting, we've got Shopify reporting, we've got Qualcomm reporting, we've got Unity reporting, we've got Robinhood reporting, Etsy reporting, etc. First, I want to talk about PayPal. I made a whole dedicated video to PayPal earnings, everything I'm looking for. If you want all the details, go ahead and check that video out. But the short version of that is I'm looking for nice 7 to 10% revenue growth. I'm looking for massive EPS beats higher than 83 cents a share. I'm looking for operating income of 1.05 billion or higher. I'm looking for 30 to 40% growth on the Braintree side of the business, which is their unbranded business-to-business payment handler. And of course, I want commentary, strong commentary, ideally around the CEO transition. If they could announce a CEO on this Q2 earnings, that would provide some clarity for where we believe PayPal is going to move in the midterm and in the long term. CEO transitions cause a lot of uncertainty around stocks. Stock market hates uncertainty and they sell off stocks when there's any substantial amount of uncertainty around that position. So if we can get a CEO update and figure out who's going to be the successor and what their focuses are going to be, we can start to get some clarity around PayPal and we can see a nice upward move if we get that CEO news. Shopify is also reporting after the bell. I own both these stocks. I recently started buying PayPal and I stopped buying Shopify in October of last year. I bought a large chunk of shares in mid-October and I'm up over 150% on those Shopify shares already. This is going to be Shopify's first earnings since they divested the logistics side of their business and went from an asset-heavy company to an asset-light company. They're really focusing on the software side, which is going to make those margins explode. So I'll be heavily focused on the margins with Shopify as it relates to their Q2 earnings. They're also expected to still be growing in the high 20s as it relates to revenue, which is very impressive considering they divested the entire logistics side of the business. Qualcomm is reporting. Qualcomm, in my opinion, is probably the most undervalued chip stock right now. Probably the only chip maker that is undervalued. Maybe Skyworks Solutions is in that situation as well, but I would prefer to own Qualcomm. I got very close to opening a Qualcomm position, but I'm not fully done wrapping my head around their competitive advantage. I'm not sure. I'm still trying to figure that out. That's why I haven't bought Qualcomm yet. It takes me a little while to do some real research around these companies to decide which one I want to buy in the chip space. Etsy's also reporting on Wednesday after the close. That's a stock I've wanted to own, but I've never liked the valuation around it. I think it's a really cool business model. They've kind of captured a specific niche as it relates to the e-commerce world. So it's a very interesting stock. I don't have a position. I'm interested in having a position, but the valuation is just consistently too high for me. So we'll see what happens after Q2 earnings. It's on my watch list. We'll see. Oh boy, Thursday after the close is absolutely insane. We have Amazon reporting. We have Apple reporting. Those are the two big dogs that everyone will be looking at. I'm personally a shareholder of Amazon. I have never owned shares of Apple before, and I don't plan on buying around this Q2 earnings. But one thing's for sure, the market is going to move massive. The S&P 500 is going to move massive. The NASDAQ 100 is going to move massive because of Amazon and Apple reporting. That is for sure. I think Amazon is going to come out with great revenue beats in the double digits again, somewhere around 10 to 12% beat. And I think the earnings estimates are way too low for Amazon. And one of the main reasons for that is actually one that I disagree with. But in GAAP accounting, generally accepted accounting principles, if a public stock owns another public stock and that stock goes up, they have to report that as earnings in the EPS numbers. So if you didn't know, Amazon owns a very heavy stake in Rivian, and Rivian's an EV maker. Rivian has had an amazing last 3 months, and that just happens to be in the perfect time for Q2 earnings for Amazon. So I think those EPS headline numbers are going to look ridiculous, but remember, that's going to take into account that Rivian share price moving up nicely in Q2. So it's really not earnings per se, because they don't even have to sell the stock in order to show that gain. It's kind of silly. I don't really like how it works, but that's the GAAP principle, and that's what they have to go with. I'll be listening closely to the AWS commentary. There's been a little bit of AWS weakness over the last little bit, but I think that the AI super cycle that we're about to enter is going to increase AWS revenue in a massive way, and it's going to lead to a re-acceleration of growth for AWS. Apple is also reporting numbers. Biggest publicly traded company in the world, biggest component of the S&P 500, biggest component of the NASDAQ 100. They're expected to have revenues fall by somewhere around 13%. If I had to bet money, they're going to post an EPS beat. They're going to post a revenue in line, and then they're going to raise their guidance just a little bit for the rest of the year for full year 2023. I would say it's going to be a lackluster quarter for Apple, but the stock price will probably still move up a little bit after earnings, because the CEO Tim Cook is so good at turning a mediocre earnings into great commentary and great outlook moving forward. Coinbase is reporting that same day. I'm not interested in Coinbase, not even going to look at the numbers. Block is reporting. They have tied themselves way too much to Bitcoin, in my opinion, but they are a competitor to PayPal, so I'll be checking out their numbers. I chose PayPal stock because of the valuation. I feel as though it's a better value deal. There might be a little bit more growth at Square, but in the fintech space, I chose PayPal due to the deep value situation that we were presented with and the massive opportunity with the Braintree side of the business over at PayPal. So like I said, I'll tune in, I'll check out numbers, I'll listen to the conference call with Square because of my exposure to PayPal stock. Airbnb is reporting the same day. Man, these are some massive, super important companies. Airbnb is a stock I would love to own. I've almost pulled the trigger so many times. I've never held a position with Airbnb before, but I really want to. I'll be checking out Airbnb not only to hear where the consumer's at, but also because I'm very interested in owning the stock. We'll see where the Q2 numbers are at. We'll see where the full year guidance is at, and I'll decide if I'm going to buy shares of Airbnb for the very first time. I'm not sure yet. It's got to be the right valuation. Even if I love a company and the valuation's not right, I'm not going to be buying that company. The valuation has to match my excitement around the company. When Amazon was trading at all-time highs, there's no chance I'm touching that stock. When PayPal was trading at all-time highs, when Shopify was trading at all-time highs, I'm not touching those stocks. I'm only touching those stocks when I feel like the valuation is in line with the current fundamentals or undervalued based on their current fundamentals. Friday before the open, we have quite a few retail investor stocks or retail trader stocks. We've got FUBO, we've got Nikola, we've got Fisker. Those are three companies that a lot of the retail community is invested in. I'm not personally interested in any of the three of them, but I'll probably check them out just to see where the numbers are at because they're interesting to look at. Nikola, definitely, it's a big drama show, so I'll be checking those numbers out. Also, I didn't mention any of them, but it seems like literally every single master limited partnership, MLP, is reporting this week. If you're looking for specific dividend stocks, check out MLP stocks. Not every one of them is a buy. A lot of them are massively debt loaded. A lot of them are yield traps, but some of them pay crazy dividends and have nice upside with great fundamentals. If you can find one that's undervalued, you can get a nice turnaround play, you can get an insane dividend and an even more ridiculous yield on cost. Just a random aside if you want to check out MLPs if you have time on your hands. So needless to say, this is going to be an absolutely insane week in the stock market with big dogs like Apple and Amazon reporting, as well as tons of other stocks like PayPal, Shopify, etc. I want to know what stocks you own that are reporting this week. What stocks do you not own that you want to own to see if Q2 is the time that you're going to pick up shares? I want to hear about it down below. What are you excited for? What stocks are you watching? Let me know. I appreciate you being here and have an amazing day.